everyone else says Tesla is a Da Vinci, right? Like there's no other company like Tesla in the world. So shouldn't that scarcity be worth a premium?
Ladies and gentlemen, welcome back to the channel. Here in this video, I want to play an incredible clip from Tom Lee discussing two things. First and foremost, he says institutional investors are more bearish now than they were in 2020 during the COVID crash and 2023. You know what that means, right? That means there's probably a lot of upside left for this market. That's my view as well. I will share my perspective with you a little bit here in this video. Also, he says that Tesla there's no other Tesla. He says some very incredible things specifically about Tesla stock that I think you all should hear. I know it made me even more bullish on Tesla, which I thought was kind of difficult to do. Now, beyond that, I will share my perspectives on Tesla stock this week, heading into Tesla earnings, my expectations of what I think the stock will do, if we should expect upside, downside, nothing, just kind of sideways trading, up until earnings, and then my views on what happens after earnings, which if you don't know already, I think Tesla is going to rally hard after earnings. I actually think that this earnings is the most important earnings for Tesla in many years, and that it likely starts a march towards $600 by the end of this year. Yeah, that's a double from here. Yeah, we have a lot of work to do, ladies and gentlemen. Hit that like button and subscribe to the channel if you have not done so already. If you guys want to come trade with us live in real time as well, check out that link down below in the description of this video. Again, this is the trading community portfolio, up 64.25% year to date. What we're doing over there is finding those small cap stock opportunities. A lot of small caps are garbage. We are finding the good ones. There is proof in this. They are already starting to work. I like AI and biopharmas right now. I think those are really the areas that are underlooked and underappreciated. We're not looking for 7 to 10% a year. We're looking for 700% a year, okay? Those are the kind of opportunities we are looking for, trying to minimize risk by excluding the bad companies and focusing on the good ones. There's a whole process and you know, guidelines for this that I use personally to exclude 97% of stocks and really hone in on those 3% of potential big winners. So join us, link down below in the description of this video. But now let's hear what Tom Lee said about institutional kind of sentiment and positioning, and Tesla stock specifically.
Your institutional clients didn't believe in what was happening, and that was the wall of worry that you kept using to justify, no, we probably have more momentum left. When you talk with these people, do they just want to curse you out, but also at the same time, they want to say, well, thanks for letting us know it's time to buy?
Yeah. Well, compared to 2023 and 2020, the institutional universe is even more bearish.
Wow.
They're convinced we're late cycle. One thing to keep in mind is if you look at political affiliation in the equity market, 65% of fund managers voted for Biden.
I did not know that.
Yeah. So, but if you look at the bond market, it flips. The
Right.
bond market historically votes Republican.
Correct.
So most people think Trump is a madman, right? Because they didn't vote for him.
Are
So-
you saying TDS is one of the reasons why people did not buy the dip?
Yeah, we write about it a lot in our research, actually. So it's a partisan stock market. And actually, people... So these have been uncomfortable conversations that we've had all year
I would
because...
imagine. No.
Yeah, because they're like, Tom, we can't... You're telling us not to sell. Because our advice was, don't sell. Like, even though I didn't know where the bottom was, I did know it would be V-shaped.
Right.
But they're like, Tom, we can't do that, you know? And then I was like, well, I showed the stat. Whenever the VIX is above 60 and then it closes below 30, 100% of the time it's been the bottom.
Correct.
And they're like, well, it's different because the Fed's not going to save you. So everyone found a reason to actually argue for why a recession was starting. And as you know, economists went full on recession call.
That's correct.
So if you're a equity guy, how can you go stocks are going to do V-shaped when the economist of the firm just said there's a recession? So
Right.
I think they got caught, and yeah, we're not having happy conversations with people.
Do you still think this is you've articulated now that this is the beginning of a new bull market, and I imagine those institutional clients lose their mind when you say that. In a sort of nutshell, why is that the case?
Well, it's fact based because we had a drawdown of more than 20%, and then we made a new high. So like the weird math that like let's say a commodity trading advisor, a CTA,
right,
has is that when you have a drawdown and then you make a new high, that date is the start of a bull market.
Huh.
So actually, like in the mind of the institution now, breaking 61.41 was a new bull market.
Wow.
But the retail investor bought it at 4,800 to 61.41. But the algos are going to say a new bull market started like last week.
Do you think retail participation is net good?
Yes.
Why?
Well, there's a big transformation in the stock market today, and I actually would give credit to X, which is that the best companies have turned shareholders into customers.
Yeah.
Right. Like, I'll give you a perfect example. MicroStrategy. They've orange pilled people. Like, people own MicroStrategy not because it's a security business, but it's because Sailor is getting me more Bitcoin per share. Palantir. Alex Karp is a cult of personality.
I know a little bit about that one.
Yeah. How about Tesla? Tesla is, you know what? It's a bet on Elon. So these stocks are getting a real discount on their cost of capital because they've turned shareholders into customers. And so I think it's actually very healthy because that's the Peter Lynch thing. Peter Lynch says, buy what you know. Well, someone says, like if you talk to someone who owns Tesla,
yeah,
and you're like, tell us about, and they could tell you that Optimus Prime, FSD, literally they know the company cold. Like,
right.
They know what they're buying. Like, the retail investor is pretty educated. So I think like when someone says, oh, it's dumb retail money, it's totally not true. I think retail knows what they're doing.
So a lot of the institutional guys will say, well, Tesla's at $1 trillion, PE of 200. That person that can tell you all the ins and outs of FSD doesn't understand valuation. But your argument here is, well, that person probably owns a Tesla. They have experience with FSD. They can be a little bit creative in terms of their imagination on where the company can go. And valuation might not matter as much. Is that the argument from the valuation side that says a 200 PE is crazy versus the cult member who says, I am in this car every day. You don't understand what you're talking about.
Well, let me put it this way. It's a very cogent question you're asking. But the real second question to that is, how many people fundamentally need the PE to be the basis for an investment? It's a shrinking universe, okay? Let me put it this way. Do you own a luxury watch?
I don't.
Okay. So let's say someone has or do you have any art or something, like a collectible?
Probably not, no.
Okay. Because remember, Tesla is scarce.
I have
right?
a Tesla, though.
Yeah. But see, okay, I mean, Tesla is scarce as art. Because name another company like Tesla. Like, there's electric car companies and robots, but in the world today, like, go around the world, ask 8 billion people, is there another company like Tesla? We'll say, nope, there's only one Tesla.
There's one Tesla.
Okay, so that's a Da Vinci.
Wow.
Right? Think about that. It's like there's just one Tesla. And so then you say, pretend this is a Da Vinci, and someone will say, I'm only going to value this based on the value of the wood and the string and the paper. And so the PE of this is actually 12 cents. But then 100 people say, no, there's only one painting like this.
Right.
And I'm going to pay $100 million. That's the Tesla thing. Like, some people will say, oh, Tesla's a car company, but that's a small cohort. Everyone else says Tesla's a Da Vinci, right? Like, there's no other company like Tesla in the world. So shouldn't that scarcity be worth a premium?
I have never thought of it like that, quite frankly. I mean, that is the first time I've even heard that as a comparison, but it makes a lot of sense because we know Elon's brand is superseding a lot of the brands. I mean, I don't even know who the CEO of Procter & Gamble is.
Correct. I mean, yeah, who's the CEO of the biggest company that's not a tech?
Right.
We can't even name them. And another thing you could say is that proves Tesla has a fixed supply.
Correct.
Of one. And when it's gone, there's no other Tesla. But they have superior manufacturing. Making a car is one of the hardest things in the world to do, and making electric, and they do it profitably.
Right.
And then look at Elon says, let's do something in space, and then he's 90% of the space business. And then he says, let's do some AI, and then Grok is valued at $130 billion. I mean, kind of he knows how to create businesses. And but there's only one Tesla in the world, like Tesla company.
Right.
People might say it's a commodity, but I mean,
So I actually watched that whole interview. It was incredible. I mean, Tom Lee, when you really start to dig his brain, not just in a 3-minute or 5-minute clip on CNBC, wow, like this guy really does have a deep understanding of markets. From a psychological perspective, that's one thing that I have also tried to master in markets, is the psychological aspect. Because sure, we can all sit here and say, like, yeah, a 200 PE is kind of ridiculous. Okay. But why is it at a 200 PE? What is going to change that? Either, make it better or worse. What's going to actually lead to a stock moving higher? It has very little to do with valuation. And that's where a lot of Wall Street is completely missing the opportunity with Tesla and with a lot of other stocks. When you focus on valuation, you will always underperform. Every time in the last 30 years, pretty much value investors consistently underperform. There's obviously exceptions to that. But Tesla, okay, this upcoming week is going to be volatile. Just be on the lookout for that. I believe tomorrow is probably going to be a red day. The rest of the week, kind of up for interpretation. But it looks like Elon is dead set on establishing the American Party. That's not going to be seen as favorable for Tesla. Okay, it's going to put a lot more criticism, a lot more spotlight on Tesla because Elon is the CEO. But what I expressed in the last video is simple. None of that matters. What really matters is Tesla earnings. What really matters is scalability on Robotaxi. That is what matters for the investment thesis of Tesla stock. Nothing else actually matters. Okay? Literally does not matter at all. Politics does not matter at all. Like, create the party or not, it's not going to change the progress of, Optimus. It's not going to change the progress of FSD and Robotaxi. It's just not going to. Okay? Now, there can be scary headlines like Elon getting deported, crazy stuff. Come on. None of that's going to happen. You got to see through the noise sometimes. Now, between now and Tesla earnings, I'm actually not expecting much of a rally at all. I think there's a lot more of a downside risk than upside risk heading into Tesla earnings. One of which is because I do think the markets are going to start to top out a little bit, maybe this week or next week, if we continue higher. Like, you're not going to go just straight up forever. Okay? But this is the start of a new bull market from a Wall Street perspective. I think stocks will be much higher year end than they are today. I think the SPY is going to be at 700 by the end of the year. And I think really the last 3 or 4 months of this year, September, October, November, December, really November, December, should be really good. By then, it's going to be clear we're not heading into a recession. Tariff shocks did not cause a recession. Inflation's coming down meaningfully. Rate cuts are coming. A new Fed is coming. AI is starting to really benefit companies. Company earnings are coming in really good. The tax bill is, yes, bad for the debt, but stimulative. Okay, markets tend to do well when governments spend a lot of money. And no tax on tips, no tax on overtime should actually help the consumer recover a bit in the lower earner, quartiles, and that should also help support and boost earnings. Like, all of that, I think, is going to be realized by the end of this year. Just had to make sure the mic was on because the freaking cat is playing with the cord. Beyond the point, I do think after Tesla earnings, that's when the real rally starts. That's when I think we get the guidance of 20,000 robotaxis out on the road next year. People being able to turn their cars onto the robotaxi network by the end of this year, early next year. And I think that's where Tesla stock really starts to explode. As Wall Street starts to realize the massive AI behemoth that Tesla is going to become. But between now and earnings, like, any sell-off we get, to me, is an opportunity. If I don't want to go out and even buy the shares, I think the options are going to present a pretty good opportunity if we do sell off into the end of, this month. Roughly, Tesla earnings should be around July 20th. They could be like July 22nd, something like that. If we sell off into that event, I will be taking a trade on Tesla earnings. Probably a big one. But hey, if you guys want to see the trades that I make, short-term, long-term, swing trades, check out that link down below in the description of this video. I should have mentioned as well, like 90% of the stocks that we are buying in that trading community are not like short-term trades. So there's one that is waiting on an FDA fast track approval with like crazy good data. I think there's probably a 95% chance they get that. So it's a one catalyst kind of specific trade that should be coming any day now. But beyond that, all the other ones are like medium-term trades. 6-month, 12-month, 18-month, 24-month trades that may very well turn into longer-term investments. Specifically, that one AI one could turn into a long-term investment. And I got like almost 10,000 shares now. So yeah, some pretty big bets being placed. I really try to put my money where my mouth is. I share my positions. I screenshot everything. So yeah, come join that if you would like to. Link down below in the description of this video. You guys have a great rest of your day, and I will see you in the next one.